Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, June 1st. Hope you guys had a wonderful weekend. Now we're off to a new week here. This week will be a little light in terms of what's coming out in the economic data. But the big items that will be coming out will be the jobs data that will be coming out for the month of May. We'll get the ADP report coming out on Wednesday, and then Thursday, of course, we get the weekly jobless claims. And then Friday is when the Bureau of Labor Statistics will provide us their data for the unemployment rate and jobs for the month of May. So, of course, we'll be anxious to see what those come into, but because of the time frame, some of them might be a little bit off in terms of people are kind of going back to work in May, so it may not reflect the numbers accurately in the sense that the amount of people going back to work in those numbers. So it might show a little bit higher than what the actual unemployment rate would be, for example, due to people going back to work in that month uh, on that. So in any case, we can talk about that later. But to kind of get started here, we do have some data today, and the first two are on manufacturing. So the first item here is market manufacturing PMI for the month of May. April is 39.8, and it came in at pretty much plateaued in 39.8 in May. Now, on both of these, basically anything above 50, 50 or above is expanding or optimism, and anything below. So we did go, of course, when the pandemic hit and everything started closing down, it dropped below 50. But just before that, we were kind of teetering right around 50 on a lot of these on these data here. Uh, ISM Manufacturing Index, we had 41.5 for the month of April. Forecast gone for 44. It improved, but not quite to forecast at 43.1, so that's nice to see. So it looks like we are kind of seeing the bottom in April or May, and things will probably, hopefully, see some improvements going heading into the summer here. Construction spending dropped. So in the month of April, of course, because everything was closed down. So in February, it was I'm sorry, March, it was basically zero, no spending. Forecast calling for minus 6.8% drop. However, it dropped, but not quite to the extent of forecast at 2.9%. So that's obviously good news right there. Now, headline news: stocks are up this morning. To be honest, kind of a surprise. They did like the upbeat data in the manufacturing from in terms of the ISM. They like that it showed some slight improvement that we may have hit the bottom and work our way up. That's kind of what's kind of bring that in. China, we got two things. One, China did have some optimism in terms of their manufacturing. Their Kaizen index shows that it went back into above 50 level, which means, of course, to reiterate that it gets in more optimism or expanding territory. And so it hit about 50 point something after a previous month was in negative or contraction territory. Also, in retaliation to some of the U.S. Moves, Friday President Trump didn't come out and meet and have a news conference. It wasn't as bad as what they thought it might, feared it might be, but they are looking at taking away the special status that Hong Kong has due to autonomy. Hong Kong was supposed to be kind of a separate state from China, and now that China's kind of taking more or less over, there's no reason to give them special from what I collect from that, and special status. So China is retaliating by basically telling their people not to be purchasing our agriculture, so there's going to be, it's just the tensions are rising a little bit further between the two countries. Protests in the U.S., of course, are all around the U.S. So that raises more concerns, not only for a lot of the businesses that got burned, unfortunately, to the result, especially after having the pandemic being locked down, hoping to get back on their foot now with the burn down obviously being what potentially wiped out entirely. So the big business can be replaced, but the little mom and pop shops probably won't be able to make it, unfortunately, for that. But also the concerns that maybe COVID might come back again, having a second case, being so many people together, and having another second wave. So there's concerns about a possible second wave due to that as well. So I guess probably in a few weeks we'll probably know more about that, as it usually takes about a good week or two before any symptoms show. So again, that's something we won't know for a little bit. So a lot of mayors around the country are talking about maybe further lockdowns or further uh, extending the curfews and everything else. So we'll have to kind of wait and see how things project coming forward. But these are some of the things that are coming out, hearing a little bit out there right now. Let's go over the bond market. Bond market is basically zero. There's no movement on the bond market. We're just getting, as you can see here, it's almost pretty much at a point right now where it's going to have to make a decision here, either today or very soon. There's no change in pricing, and the 25 and 50 day are just about to be at that level where they're meeting right now. So, and it's going to have to make a choice either going upwards or downwards. Personally, I thought with the protests, the market would be down, and that would give a little lift to the mortgage-backed securities, but that has not yet happened. Maybe that will kind of sink in and happen, uh, but we'll have to kind of watch and see. Uh, if we can break above this 25-day moving edge, we got some more room here to grow. But if we break below it, we got a lot of room to worsen here too. So these are two things we have to really watch carefully. And again, let's keep our fingers crossed that hopefully we get some improvement here in the mortgage-backed securities soon, so we can all enjoy some better pricing on mortgage rates. Here we're up a little bit. We're right up against the 50-day moving average. We're at the 0.68 level here on yields, and again, it's going to be facing its 25 and 50-day moving average crossroads here, where it's going to have to move either direction. If it gets pushed down lower, that's going to be less pressure on bonds and be able to help bonds get that boost that we need as well. But if it breaks above this, it's got a long way to go, and also could push bonds to worsen, and of course rates go up a bit. All right, so that's pretty much a wrap for the day. If you guys are looking to buy or refinance in California, please direct message or email me. You can reach me at either direction. And hope you guys have a great rest of the day. Thanks so much for watching. We'll see you guys tomorrow's video. Bye-bye.